Guys, the other day we were looking at Apple, and I wanted to touch on two lessons here that came across recently in the Discord. One was we had been talking about trend lines and how when this clicks in your head, you will plot things that will happen perfectly to fruition in the future. This, if you recall, let's move this chart over. If you recall, last time I made a YouTube video, we were looking at Apple and we were around this point, and I had drawn this trend line here. Again, no closes, since this is a downtrend, no closes are closing above the trend line there. And we had drawn this on this date. And this was our main point here, was the top of this close of this green candle. And then our other one was the top of this green candle. We made the line, and then we extended it out into the past and into the future, and none of these broke our trend. So that's our trend line. Well, we recently had the NASDAQ rally. You know, the NASDAQ has been kind of fighting its way back up, and Apple's part of that. Over today, yesterday, and the day before, Apple's really been doing its best, along with the rest of the NASDAQ, to bust out of its downtrend. Well, look exactly dead on where Apple closed today. Right at our downtrend resistance line that we drew back on this day. And this is exactly what I'm talking about. When you know what you're doing and you're recognizing these patterns and you're charting them out, more often than not, these things you're predicting are gonna come true. Now, the primary lesson I wanted to talk about today is related to stochastic. I was asked recently in the Discord why I prefer to go on my stochastic settings at a ×4, meaning if I'm trading on the daily, which we're currently looking at the daily, I set my stochastic settings to 1 week. And if I'm day trading and I'm on the 15-minute scale, 15-minute candles here, I would set my stochastic settings over to 1 hour. 15 times 4 is 1 hour. Now, obviously, a week is 5 times longer than a day, but that's the closest option you have. So anyway, why do I do that? Well, it makes your stochastic less sensitive. And I want to give you a perfect example. What that means is it gives you less noise, aka false signals. We're looking at Apple on the daily with the stochastic settings on the weekly. We have not had a trend turnaround of our blue line, and we have not had the signal of it crossing over and then coming up into the sweet spot. However, if we change our settings over to the daily stochastic instead of the week, well, look at this. Back here on March 1st, this day, we would have been told that we have our crossover and then our cross into the sweet spot or the zone or whatever you personally like to call it. I know every trader has their own nicknames for this. We would have been told that we should be entering the trade. We had a bullish candle above average volume, and the stochastic would have told us, would have been our trade confirmation. Like, okay, we're going to bust through this resistance here. This is looking good. Let's enter the trade on the bullish side. This thing's going up. What this was a false signal, because this was not strong enough to continue the uptrend. It continued, or to start an uptrend. It continued the downtrend. However, if you had your stochastic settings less sensitive, you would not have picked up this false signal. See, I didn't see that at all. I'm still showing that we are in a downtrend that looks to be continuing for quite a while. So that's just one reason why I do that. Now, you will get less signals overall by making your stochastic less sensitive, either by the settings of the numbers on your stochastic or by the time frame. So by going a ×4 out, I'm getting less signals. However, I'm getting basically no false signals. Occasionally one will creep in, but you're eliminating the false signals at the expense of occasionally missing a positive signal. And to me, my trading style and the way I teach you guys is all about controlling the controllables, eliminating as many variables as you can, because everything in long-term success in the market, both fundamentally and from a technical analysis trading style of stocks, is about your risk to reward. Minimizing risk for a solid reward. And this is just one, yet another example of something that you can do that helps you get towards that goalpost of risk versus reward.